Good morning, students. Today we will begin with a new chapter, Goodwill, Nature and its Valuation. This chapter is a very important concept of partnership, and usually it comes in 1 marker, 3 marker, or 4 marker question in CBSE board. Whenever we talk about goodwill, the very first thing which came in our mind is goodwill means a good reputation, a good name. The firm enjoying goodwill have good name, or we can say good connections with customers. Suppose if we take an example like McDonald is enjoying goodwill, it means they have good name, they have good reputation, and they have maintained good connections with their customers by providing quality of goods to them. And all these factors help the firms to earn higher profits in future without putting extra effort in present, as these extra efforts have already made by the firms in past. Goodwill is a thing which put the businessman in an advantageous position, a position which helps the business to earn higher profits in future. If we talk about in accounting term, goodwill is an intangible asset, and the definition of intangible asset is given in Accounting Standard 26. So, Accounting Standard 26 defines the meaning of goodwill, which says that goodwill is an intangible asset. Intangible means an asset which do not have a physical existence. It is a thing, or it is an asset which cannot be seen and which cannot be touched. But yes, it is an asset because it helps the business to earn profits in future. And it is an asset because goodwill has a realizable value. Now, Accounting Standard 26 has classified goodwill into two. The first one is purchased goodwill, and the second one is self-generated goodwill. Purchased goodwill. Now, first we will discuss what is purchased goodwill. Purchased goodwill, we will discuss it with the help of an example. Suppose there is A Limited which has purchased the business of B Limited for rupees 10 lakh. But the assets of B Limited were rupees 12 lakh, and the liabilities of B Limited was rupees 4 lakh. So the net value of B Limited is rupees 8 lakh. But A Limited has paid 10 lakh to purchase the business of B Limited. So the 2 lakh rupees which A Limited has paid extra is the amount of goodwill, and A Limited has given rupees 2 lakh to purchase the goodwill of B Limited. As A Limited has paid the cash, so the journal entry will be goodwill account debit to cash, and goodwill is an asset, so asset is always shown in the books of account as an asset. So I am preparing here a balance sheet, and in the balance sheet on the asset side we show goodwill. Now let's discuss then what is self-generated goodwill. Self-generated goodwill means now this 2 lakh goodwill, the 2 lakh which A Limited has paid to purchase the goodwill of B Limited. Now B Limited has earned this 2 lakh goodwill by providing good quality of product to their customer, by having efficient management, by having good reputation. So all these factors helps the B Limited to earn this goodwill of rupees 2 lakh. So as no cash is being paid for generating this goodwill, as this goodwill is internally generated goodwill, so it is not shown in the books of accounts. So self-generated goodwill is not shown in balance sheet. So in this session we have discussed what is the nature of goodwill and what are the two types of goodwill: purchase goodwill and self-generated goodwill.